Record-keeping requirements for exempt persons under UAE Corporate Tax Law. Under the UAE Corporate Tax Law, certain entities or persons may be classified as exempt persons, meaning they are not subject to corporate tax obligations due to the nature of their activities or their status. Despite being exempt from tax, these exempt persons are still subject to specific record-keeping requirements to ensure their exempt status can be easily verified by the Federal Tax Authority, FTA. The FTA requires that adequate documentation be maintained to substantiate the exemption and to facilitate the determination of whether an entity continues to meet the criteria for exemption. This article outlines the general record-keeping obligations for exempt persons, the types of records that must be kept, and how these records will be used to confirm the exempt status of the person under the corporate tax law. Purpose of record-keeping for exempt persons. While exempt persons are not liable to pay corporate tax, they must maintain sufficient records to demonstrate to the FTA that they qualify for the exemption. This process ensures transparency and allows the FTA to easily verify the exempt status of a person or entity without confusion or ambiguity. Proper record-keeping is critical in safeguarding the exempt person's tax-free status and in avoiding penalties or disputes with the tax authority. The exact nature of the required records will depend on the specific reason for the exemption, as different exemptions are granted for different purposes. For example, a public pension fund may be exempt for reasons related to its status as a non-profit, while a qualifying investment fund may be exempt due to its particular role in managing investments. Key record-keeping requirements. 1. Documenting exempt status. All exempt persons are required to maintain records that clearly establish and support their claim for exemption. This could include charter documents or corporate bylaws showing that the entity is formed under conditions that qualify for exemption. Tax-related documentation proving the basis for the exemption, such as specific legal texts or certificates issued by relevant authorities. 2. Specific documents depending on the exemption type. The required documentation will vary depending on the type of exemption granted. For instance, public pension funds and social security funds. For entities such as public pension funds or public social security funds, records must show that the entity is fulfilling the necessary requirements to qualify for exemption. These records might include legal or regulatory documentation that identifies the entity as a public pension or social security fund, financial statements indicating the operations of the fund and its compliance with conditions related to its exempt status. Private pension funds and qualifying investment funds. For private pension funds or investment funds that meet certain conditions for exemption, documentation should include ownership and control records showing that the entity is meeting the conditions for exemption, such as being owned and controlled by exempt persons. Investment documentation indicating that the fund's operations align with the objectives that make it eligible for exemption. Example, investing exclusively for the benefit of the exempt person. Qualifying investment funds. Investment funds that meet certain criteria for exemption must maintain detailed records regarding ownership structure to prove that the fund is primarily owned and controlled by exempt entities. Fund performance records, including documentation of investments and returns that align with its qualifying status. 3. Ongoing compliance with exemption conditions. It is also essential for exempt persons to maintain records showing that they continue to meet the criteria for exemption throughout the year. For example, annual reports or tax returns that continue to demonstrate compliance with the exempt status. Correspondence with regulatory authorities confirming the entity's ongoing exemption. Record retention. The UAE corporate tax law does not specify the exact period for which exempt persons must retain their records. However, as a general rule, These records must be kept for as long as the exempt person remains eligible for the exemption, and should be available for review by the FTA upon request. This ensures that in the event of an audit or query from the FTA, the entity can provide evidence supporting its tax-exempt status. Given the potential complexity of certain exemptions, it is crucial that exempt persons maintain organized records to facilitate the process of verification. In some cases, it may also be advisable for exempt persons to consult with tax professionals or legal advisors to ensure that they are complying with all necessary documentation and retention requirements. Penalties for non-compliance. While the corporate tax law does not impose penalties solely for being classified as an exempt person, failure to maintain the required records could result in penalties if the FTA determines that the exempt status cannot be substantiated. In such cases, the FTA may impose penalties similar to those applicable to non-compliance with general tax requirements, including AED 10,000 for each violation of the record-keeping obligation. AED 20,000 for each repeated violation within a 24-month period. These penalties are intended to encourage exempt persons to maintain the required records in a manner that allows the FTA to easily verify their exempt status and avoid any disputes regarding their tax obligations. For more details, contact us.